Hi everyone, welcome to my channel for the newcomers and welcome back for the existing viewers and subscribers. Thank you for stopping by. And again, as always, this is a weekly series on the technical analysis using market profile as well as candlestick patterns view of what happened and what could happen potentially for the following week. As usual, I always analyze the ES futures, that is S&P 500 index. Currently I'm analyzing the December contract, but I would be soon rolling from next week onwards to the March contract. So let's start with what has happened last week on where we had discussed. So on December 2nd, last Friday, I mentioned that 4073 is my line in sand for the upside and for the downside. As you can see, the whole overnight session on last weekend after Friday, we traded below the spike base, which is actually bearish. And so with the moment we opened on the Monday, we had actually continued going lower after breaking the overnight low of Sunday. Since we closed below the prior day's low, it was actually bearish, and we in fact formed a single print on that day, which we didn't fill them yet. So the bearish trend continued, and then we finally got a close below the 4-day balance low, and then there was a PPI numbers on Thursday, and then we again got a close within the 4-day balance low. Generally when the price goes below the balance and then closes back within the balance, that targets the other end of the balance. We had actually closed today on Friday, the December 9th. As you can see here, the cursor is pointing out, we had closed below the Thursday's low as well as below the balance. So the upside targets are only applicable above the spike base. So we created a new spike today on Friday. So in the last 30 minutes, we got a sharp sell-off and closing near the low of the day. And that's why it's a spike rules that are applicable for Monday. So the spike base is the line in sand, which is 39.44. So below this, it's going to be bearish, and above this, it's going to be bullish. So that's it based on the market profile view. In my opinion, again, next week is packed with a lot of Fed events. So I would say trade with caution. And again, the line in sand based on market profile analysis for Monday and the following week would be 3944 as a line in sand. Like above this, you can play calls or stay long in futures, and below this you can take puts or stay short in futures. So with that, let's move on to the candlestick pattern analysis. Again, let's start from the top-down approach. The monthly chart. Let's start with the monthly chart. So the monthly chart is bullish, meaning it's still in the bull territory. So last week's title says bear market is over, and that's based on this monthly trend. Actually, sorry, I missed covering that in the last video, but yeah, the last month close, the November month close was above the October month's high. So that is why the monthly trend has changed, and generally that's when all the big boys enter, when the monthly trend changes. And again, if it changes to monthly trend up, that doesn't mean market will not come down at all. It does pull back. So it's like a two-way auction process. Price has to come down, and then new buyers would come in, and then the next rally starts, something like that. So now in December month, we had traded slightly above November month's high, but then we are trading now back within the November month's range. So it is actually, the trend is up on monthly, but it is balancing as we are trading currently within November month's range. So that's the monthly trend on SPX 500 futures, that is ES. Let's look at the weekly chart. So weekly chart, so we had closed actually below prior week's lows. The trend on weekly is bearish. And the way how I confirmed that the close is below is I clicked on the prior week's candle and it shows me all this open, close, high, low, right? So the close the low of last week is 3941.25, and then this week's close is 3936.25. If you look at the C section of this highlighted window, small dialog box, the close is at 3936. So the trend on weekly is actually bearish. And then let's look at the daily. Daily is of course bearish because we got a close based on market profile below the prior day's low, but then based on the candlestick pattern, it is actually, the trend is up on daily but balancing. So that's about it, guys. I hope you have learned something new. Let me summarize again. So based on based on market profile view, the line in sand would be 39.44 for next week. So below this it's going to be bearish, above it's going to be bullish. And then based on the candlestick pattern view, we got a mixed signal. So on daily we have a trend up but balancing, and then on weekly the trend is down, and the monthly trend is up but balancing. So that's all, guys. I hope you've learned something new. If you did, please give it a thumbs up, and if you have any questions, please feel free to comment and I would be happy to answer your questions. With that being said, trade safe and have fun. Have a good weekend. Bye.